Economic analysis will show you that central banks are hard at raising interest rates to try and combat inflation. At the other end of the issue is that we've got slowing growth because of this rise in interest rates. And also we have concerns about rising debt levels. And of course we've got debt limits being expanded by governments all the time. The big question is how can you invest in this environment? Well, joining us now is Simon Popple, who has just written a book called Investing in a Recession. It's an e-book, but it sounds like an interesting read in the current environment where we're being asked all sorts of questions as to how we can get to the bottom of this idea about investing the best way to get us through this recession.
No, absolutely. I mean, recessions by their very nature are challenging times, but I think that if you are savvy, there are certain asset classes that you should look at in a recession, if you get in before the crowd, it may be good for you.
And that asset class is?
Well, I personally like gold at the moment because if you look at gold, it's been around for thousands of years. It's got form. It's got global recognition of being wealthy, of being worth money, and I think it's an asset class that very few people look at.
And this idea about investing against this rising debt limit that we're continuing to hear about in the US, they continue to raise the debt ceiling in order to cope with the expanded budgets that they've got to cater for, dealing with the debt pile, dealing with rising interest rates, dealing with falling growth. Why is gold such a good option? And if you trade it against the debt limits, what do you see in terms of projections?
Well, I mean, if you look at this chart, I mean, you can see that the US debt limit has continued to go up. I can't see any reason why it's going to go down anytime soon. And it also shows, US debt, again, does seem to be very much on an upward trajectory. And also the gold price. And, if you look at the trajectory of the debt and the gold price, the gold price seems to be above the debt limit more often than not. And therefore, in the interesting times we find ourselves in, I think gold is certainly worth looking at.
Of course, in the middle of that chart, if we keep it up there for a minute, we can just highlight that really big pump up during the great financial crisis. And of course, there are some that suggest that, I was talking about doing deep financial and economic analysis, there are some that are suggesting that there is yet still to come some sort of a crisis around the corner for capitalism. Is that good or bad for gold? I'm a little bit unsure as to how gold sits.
I think it's very much an unknown, but all I would say is, it's been around for thousands of years. There have been a lot of crises in the last 1,000 years or so, and therefore, personally, I would prefer to be with an asset class that's got form rather than one that hasn't.
The next chart you brought along is interesting because it compares where we are in terms of the gold price at the moment in comparison to where that big spike occurred years ago for gold. There is the darker line here, which is the price it is as we see it at the moment, and then you have this big extension on the yellow line which spikes right up. Explain more about this and what interpretation you give this chart.
Well, I mean, I think that gold is a form of investment and insurance, and I think if you're looking at it from, let's say, an investment perspective in terms of what could happen to the gold price, clearly it's an unknown. But I think this chart's quite useful because it kind of shows where the current bull market is relative to the one in the 1970s, which obviously the gold price shot up, and so even though I would perhaps view gold as more of a defensive asset, if, and obviously it's a big if, we get a bull run that was similar to what happened in the 1970s, then you could get some dramatic sort of increase in the gold price. So it could be both an investment and a form of insurance.
And how do you go about investing in an opportunity that you seem to consider is possibly around the corner, or certainly at some time in the future? How do you get the best opportunity to get a return out of that rise in the price?
Well, it really depends on your appetite for risk. It's something I cover in my book, Investing in a Recession. But I mean, there's really different sort of ways you can approach the gold market, and this is a big misconception that everyone has, that gold is gold and that's it. There's lots of different parts of the market, and so I would describe the more sort of defensive way of getting involved is to buy physical gold through a bullion dealer and get them to store and insure it for you. If you want a bit more risk, you could buy a producer that has got a good track record in terms of producing, gold. A lot of them produce other stuff as well. You could go for a smaller producer, or if you want to get some really high risk stuff, you can go for an explorer. Personally, I like to have a bit of everything, but you do need to be very clear on what kind of risk you want to take.
When looking at gold as an opportunity, one also ought to suggest perhaps maybe there's opportunities in other commodity markets as well. How do you approach this?
Well, I mean, I like to look at the bigger picture as well as gold itself. And whilst I do like gold, I actually also like commodities as an asset class as well. And that leads me to this graph, the GSCI, the Goldman Sachs Commodity Index. And as you can see, it doesn't look like we're at the bottom, but it looks like it could be an interesting time to invest in commodities. Although I'm have gold as my preference at the moment, I like to have a diversified portfolio. So I'm not only in gold, I'm in other commodities as well. And just looking at this chart, it sort of would indicate that it's good to perhaps spread your bets a little bit, not just in terms of different gold companies, but also different commodities as well.
It's an interesting point, isn't it? Because this is the idea about markets price in the future. And so my personal observation from this is that, as you say, there may be yet some downside to go. We're hearing a lot about China coming back online, and of course the increase in demand on that, so which would give a little bit of a nice upside to commodities, which could be an extra thing to consider. Let me just quickly go back to this chart if we can, because I think it's worth looking at this in the context again of this spike that appears just the left-hand side of the middle, and that again is the great financial crisis, isn't it? Just showing you what the effect of that was before the slump, going into the depths of what was then considered to be a one-off hit on the markets. Ahead of that, what are we expecting? We're expecting a rise before another fall, or are you suggesting that it's just going to rise and where?
Well, I think it's very difficult to sort of work that out, because this index is very skewed towards energy companies. But I think that if you've got a broad basket of commodities, you've got exposure not just to gold but to silver, cobalt, lithium, all that sort of stuff, then I think there's a greater chance of one of them or two of them doing well. And because of the volatility in commodity prices, you don't need much to go right for you to do very well. Just
going back to gold and this idea that it is looking ripe for an opportunity. What other evidence would you present to suggest that this is something that we should be looking at because of what else is happening in the market?
Well, central banks are buying a lot of gold, and there's a saying, there's no smoke without fire. I could have brought over a slide that looks at global central banks, but I thought this slide was quite interesting because it's Chinese and Russian gold reserves. And if you look at the far right-hand corner, you can see that it does look like certainly in China that's
the red box.
The red box at the top. That they're actually increasing their reserves further, and so there does seem to be a global demand for gold, and I'm sure you've heard the phrase, a child's been as good as gold, and the golden years as you retire, and you spend all your life working for a gold medal. So I think there's some clues in there somewhere, and I think that people, if they've never looked at gold before, now is the time to at least have a think about it.
To what degree does the central bank buying chart lead the price of gold? Is there a lag? Because the price of gold, to me, doesn't seem to be representing half of what's gone over the last 3 or 4 years.
Well, it's the gold is it's a strange asset from that perspective. I mean, central bank demand, don't get me wrong, is very important, but there are lots of other uses for gold as well, jewellery, investment, just to name two. So to really move the needle, you need all of them to be heading in the right direction.
Okay.
But I certainly feel that gold has got better days ahead of it than perhaps behind it.
Simon, we'll have to leave it there, but thanks for joining us. Simon Popple, the author of Investing in a Recession, talking about the opportunities potentially around the corner for gold. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.